Look, I think that clearly the biggest risk is that we are losing our rate of change on policy stimulation. So as we're going into quantitative easing, one, it's tremendously powerful, two, a little bit less so, three, less again. This year we've seen the Bank of Japan go to negative interest rates and the ECB go to increasingly negative interest rates, and both currencies have violently retraced and started to appreciate, which was most unexpected from the central bankers that were implementing these policies. At the moment, Janet Yellen still has control of the dials, but if the markets lose faith in our central bankers to do whatever it takes, or it only just used to be a few words they'd need to utter and the markets would skip straight into line, if we lose the faith in our central bankers to engineer those outcomes, then the markets can look very, very different very quickly. I think everybody acknowledges that the markets are somewhat inflated because of the policies that we have been living under. It's been a fairly coordinated policy response around the globe, certainly cutting interest rates to zero after the GFC. We've now had more than 650 global central bank rate cuts since the GFC. There haven't been too many people that have been successful at hiking and maintaining those hikes. The ECB tried in 2011, that failed spectacularly. Israel tried, they're back at 10 basis points, I believe. Canada, New Zealand and Australia all lifted rates and have all been cutting, continuing to cut in the case of Canada and New Zealand, and we would argue Australia is still very much in a cutting cycle, albeit in a protracted pause inside that cycle. So I think that's the biggest risk, and working out or gauging when that might come to fruition is very difficult. It clearly we have lost some faith in some of those institutions, but the US still have control, and we've seen that out of the March Federal Reserve meeting when Yellen was very dovish, very supportive of lower for longer rates and the like, and equity markets have loved it and really powered on almost back to to the highs, and it's up on the year now in the US, which is incredible if you think where we were at the start of February. So we'll monitor that very closely. I guess there is a cycle to that policy as well. Clearly if risk markets do too well, very difficult for Yellen to maintain that dovishness. We all see that the US economy is probably the bright spot in terms of Western economies and developed economies. And there is a danger that they fall behind the curve and need to hike again. So, that needs to be acknowledged in the commentary, and that can have, large implication for risk markets and equity markets should they move to that, more neutral stance. So it requires a lot of maintenance to watch it and watch it closely, but we certainly put a lot of time into doing that. But yeah, it's a movable feast, and one that we're going to need to continue to monitor.